Welcome back. You're watching Power Lunch. Two big breaking news stories here that we're continuing to talk about. The top stories at lunch. One of them, the government's decision to allow the direct import of ATF, huge relief for aviation companies, at least sentiment perspective. And you've got the stocks soaring. And the other one is not so good news in the economy, with growth expected to slip below 7% in FY'12. Let's pick up on that second top story now. You've got GDP numbers expected to slip below 6.9%, with industry continuing to look weak and broadly speaking, investment trends not particularly encouraging as well. If you look at growth on a longer term basis, we're looking at growth levels not seen since 08-09, which was the peak of the Lehman crisis. And you've come off fairly steeply from the 8.4% growth that you've seen in the last 2 years. Joining us to talk us through what the picture on the ground looks like, what we should look ahead to, what needs to be done most importantly to revive the economy, Mr. Adi Godrej, Chairman of the Godrej Group. We are also joined by Dr. Rajiv Kumar, Secretary General of FICCI. Very good afternoon to both of you. Thank you so much for taking time to speak with us. Mr. Godrej, I want to start with you, sir. When you see 6.9% growth, I know it's just, a little bit below 7%, but psychologically that does make you wonder what went wrong, what's taken us all the way from 8.4% to under 7% in just 1 year. Unfortunately, we can't entirely blame it on the global situation this time.
Ira, first of all, it was 8.4% last year. The statistical organization has predicted it will be 6.9% this year. My personal view that it will still be over 7% this year. I think they have not taken into account the change in both consumer and general economic sentiment from the 1st of January 2012. I think growth will be better than their estimate. I feel their agricultural growth estimate seems to be below what we expect it to be, and even the industrial growth should be a little better. I do expect that the final numbers will probably take us to a 7% plus, slightly above 7% growth rate.
So you have seen a turn, sir. We've seen it on the markets for sure, but even in terms of what you're hearing people talk about, perhaps investment decisions, which are the most crucial, Mr. Godrej, you've seen a visible change in that mood in the last, say, month or so?
I see a visible change in consumer sentiment, also the general economic sentiment. As you say, it has manifested itself in terms of the stock market having risen quite considerably since the 1st of January. The rupee has appreciated quite considerably from the 1st of January, and the general sentiment from the election results looks like it will enable the government to take stronger decisions once the election results are out. And I do expect a budget that will perhaps promote investment.
Dr. Kumar, are you equally optimistic, and what have you made of some of the finer print within that data? The investment numbers actually, from what a couple of economists told us, didn't look that bad. At least, in constant terms, it was, I think, about 5.6% kind of growth that's being talked about. What did you make of the numbers, sir?
Well, I'm afraid I'm not as optimistic as Mr. Godrej about the last quarter of this fiscal year. He's of course saying that the January to March period would see a better performance than is expected by the statistical office. I'm on the other hand rather sanguine about the investment prospects, and as you see, the investment in 2011-12 is expected to be about 32% of GDP, which is 6 percentage points below the peak that was reached in 2007-8. And the growth in India will have to be driven by investment, and because it is the capacity expansion that is key to keeping the growth momentum going, because just a mere growth in consumption, domestic consumption, will not help us, because that just shows up in inflation. And given that the global demand conditions are going to be rather fragile, it is the investment which has got to be the mainstay. And here I am afraid I don't see a turnaround in investment sentiments unless the government really does do a major policy act between the after the election results are announced and in the run-up to the budget. And I hope Mr. Godrej is right. I really sincerely do hope that the electoral results will give the government the confidence and the circumstances to take the steps required to building up the investor confidence and improving the business sentiment in the economy.
And as we've been talking, the budget date has finally been announced. The 16th of March is when the FY'13 budget will be presented. Mr. Godrej, can the government do enough right now? Or is there anything the government can do? I mean, they don't have room for a large fiscal stimulus. And people are arguing that that's not even what the economy needs right now. On the monetary side, yes, there's some headroom to reduce rates, but perhaps not too much. So what will it take to spur up the economy? Just mood? Will that be adequate? Probably not, right?
No, I agree. It just sentiment won't do it. I agree with Rajiv that investments have been poor, and of course investment has a lag effect. So the poor investment will not allow us to grow very rapidly in the next year unless, and that's a big unless, the GST is passed at an early date. Because I think the GST would be a very big stimulus to the economy. And I tend to disagree with your view that on the monetary fund, not much can be done. I think inflationary expectations are already going down. Global commodity prices have been coming down except for crude oil. And I think it is about time the Reserve Bank starts bringing rates down and perhaps even reduce the CRR further.
Dr. Kumar, would you agree that at least start with whatever room you have on the monetary side? There are people who said that actually you don't have much more than 50 basis points because inflation will pick up again. And there are others who are saying that, keep the inflation picture where it is, but focus on investment, focus on growth and reduce rates a little bit more steeply. Where would you lie on the rate debate, sir?
Well, I mean, completely squarely with Mr. Godrej that we must do whatever we can do on the monetary policy side, and let's not do it in homeopathic doses. Let's not do it in drips and driblets. The government, the central bank, should now get ahead of the curve and announce a 100 basis point reduction in the interest rates and a cut in CRR, so that the signal goes, a strong signal is communicated, given to the investor community that the government means business and wants to shore up investment, and that's the first thing. But the second thing is that this will not be done until we get the fiscal house in order, and that's where the first big no-no is for the budget to include announcements that will show that the fiscal balance is going to worsen even further. And I'm here referring to, I'm really warning against, in some sense, including announcements that will increase the fiscal liability of the central government. If you look at between 2003 to 2008, the heyday of our growth period, the correlation between an improved fiscal climate and higher private sector investment and higher growth is just, you cannot miss it. It just totally, it stares you in your face. So what you need to do is to take some out-of-the-box measures to improve your fiscal condition without taking resort to either increasing corporate or personal income tax. And we have suggested from FICCI several such measures for the government that it's possible to take to improve your fiscal position. And if you do that, the investor sentiment will improve, the private investment will not be crowded out, and coupled with the cut in the interest rate that I'm talking about, I think you will see investment surging back, and which is the only way forward to maintain growth in the economy.
Mr. Godrej, last word to you on that fiscal point, if you want to pick up on that, and also, longer term, maintaining some amount of sanctity to these numbers, whether it's fiscal deficit, whether it's investment, savings rates, rather than just go in for short term, political gains, if I can call it that, through large social spending measures. Balance of those two, sir, as you get to another budget.
Well, I totally agree. I think the fiscal deficit should definitely be contained. One important way it can be contained is divestiture. The government has a lot of assets they can sell in the market, especially, for example, investment in private companies. The government is still holding investments in private companies. They can certainly start the disinvestment process now in earnest, because the stock market has also recovered quite well. And I hope they do that. And to my mind, it should be at least 50,000 crores of disinvestment per annum.
All right, so the government has to take some tough decisions, need to get its act together. Mr. Godrej, Dr. Kumar, thank you so much. Really appreciate you giving us perspective. And the run-up to the budget, I suspect the government will be getting a lot of these suggestions, very sound suggestions. It's up to the government to actually take and act on them. We are completely out of time on Power Lunch, but we've been ignoring